Imagine a world where the ATM just eats your card, or your banking app freezes right as you're trying to pay rent.
Or the government's entire database just forgets you exist.
It sounds like a dystopian movie, right? But for the
Mm.
people running the world's financial infrastructure, that is the nightmare scenario they fight off every single day.
It's the scenario that stops economies cold.
Exactly. We often obsess over the shiny apps on our phones, the user interface, the dark mode, all of that. But we rarely talk about the invisible engines in the basement keeping those apps alive.
We really don't.
Today, we're going deep into the mechanics of that digital world. We're looking at a company that operates as a strategic partner behind major banks, government institutions, and even global tech giants like IBM.
It really is the difference between the paint on the car and the engine block. And today, we are lifting the hood on VBT Yazılım.
Welcome.
It's good to be here.
So, we have a clear mission today. We are taking a stack of documents, specifically the Independent Auditor's Report by Note Office and Euripides, and the Board of Directors Activity Report for the fiscal year 2025, and we are going to decode them.
And we need to be clear about who this is for. This is for the learner, the retail investor who sees a ticker symbol, but really wants to understand the business behind it.
Right.
We're looking at a Turkish technology company that is navigating a notoriously high inflation environment while trying to pull off this incredible high wire act.
Which is?
It's expanding its footprint from Istanbul to London and New York all at the same time.
It's a bold play, for sure. So let's first get to know the company a little. VBT Yazılım has been around since 1993. That is, over 30 years in the tech game?
Which in tech years is basically a century. I mean, think about it. 1993 was the era of floppy disks and dial-up. For a tech company to survive from then to the AI era, that implies a serious ability to adapt.
They're headquartered in Ataşehir, Istanbul, in the Quick Tower. But they aren't just in Istanbul. They have offices in Ankara, in the Mahal Business Center, an office in Adana, and a dedicated R&D center back in Ataşehir.
But the thing that really jumped out at me in this 2025 report is the map. It's getting crowded.
It really is.
And this is the first key insight for you, the listener. Usually local system integrators, they stay local. They get comfortable serving their home market. VBT is very clearly pushing for a global presence.
I mean, just look at this list of subsidiaries. VBT Europe in Zurich, VBT Software UK in London, VBT Software DE in Düsseldorf, Austria, the USA, and VBT MEA in Dubai. That is a lot of flags to plant in the ground.
It is, and notice the locations. Zurich, London, Düsseldorf, these are the DACH region, and the UK. These are high-cost, high-value markets. They aren't outsourcing to cheaper locations. They're setting up shop in some of the most expensive financial capitals in the world.
Which tells you what?
It tells me they're chasing high-margin clients, not just volume.
And on the domestic front, they have Disnet Technology, which is more of a distributor, and VBT Academy for Training. And that physical expansion is matched by their workforce. The report notes they've grown to 370 employees.
Which is up from 335 the previous year.
So about a 10% growth in headcount.
Yeah, and context matters here. 2024, 2025, those were years where we saw massive layoffs in big tech, Google, Amazon, you name it. For VBT to be adding heads in that kind of environment, it suggests they are seeing demand that the broader market might be missing.
Okay, so we know where they are and that they're growing, but let's talk about ownership. Who actually holds the keys to the castle here?
The capital structure is, it's a pretty classic Turkish setup, but with a twist. They have a paid-in capital of 117 million TL, but it's split into A group and B group shares.
And for those of us who don't spend our lives reading corporate bylaws, what does that split actually mean?
It's about control versus profit. The A group shares, they have the privilege in nominating board members. So even if you buy a ton of B shares on the public market, you don't necessarily get to drive the bus.
And the person driving the bus?
That would be Birol Başaran, the chairman. He holds the management control through those A group shares and owns about 35.42% of the total capital.
So the public float, the shares we can all trade, is what?
It's roughly 44.14%. So it's a company with a very strong central leadership figure, but a healthy amount of public ownership.
Speaking of leadership, let's look at that board of directors. 5 members total. We've got Birol Başaran as chair, Tayfun Yurdigul is vice chair and GM, then Ergin Özal, and 2 independent members, Salim Selvi and Mustafa Attike.
And I have to interject here with a governance note, because the report is very explicit about this, and it's something investors are paying more and more attention to.
What's that?
Female representation. The report states there are 0 female members on the board of directors.
0. In 2025.
0. Now, does that affect the code they write? Probably not. But for institutional investors, especially those foreign funds they're trying to attract in London and Zurich, ESG metrics, environmental, social, and governance, they matter.
I see.
A lack of diversity at the board level can be a red flag for certain global funds. It's just a data point that stands out.
It definitely does. And while we're on the subject of the top brass, let's talk money. The total benefits paid to senior management in 2025 was 32,718,191 TL.
That is a very specific number.
It is. Is that high, low? What's the context?
It's substantial, but you have to measure it against the size of the company and the profit they generated. If the company is profitable, executives get paid. If the company was bleeding cash, that number would look very different to shareholders.
Okay, so before we dive into those financials, I want to really understand what they actually do. We mentioned invisible engines, but break that down. If I'm a bank, why am I hiring VBT?
Think of VBT as a hybrid. They are a system integrator and a software manufacturer. But the crown jewel, the thing that makes them essential, is their work with mainframe systems.
Mainframes. I feel like I need to adjust my shoulder pads. Isn't that like 1980s tech?
You might think so because it's not flashy. But the global banking system, it still runs on mainframes. They are the heavy lifters. When you swipe a credit card, that transaction isn't running on some cloud server. It's hitting a mainframe.
So VBT is the bridge.
They're the bridge between global giants like IBM and BMC Software and local giants like Turkish banks and the Social Security Institution or SGK.
So if those systems go down,
The economy stops. You can't get your pension, you can't transfer money. VBT keeps them running. It's what we call mission-critical IT.
so they do the heavy lifting plus fintech and e-transformation like e-invoices.
Precisely. And if we look at the sector analysis, they are in a real sweet spot. The whole sector is driven by what I call compulsory digitalization.
Compulsory, you mean forced?
Exactly. Companies don't upgrade these systems because they feel like it. They do it because they have to, either to survive or to comply with government regulations. If the government says all invoices must be digital by 2026, every company suddenly needs VBT's software.
So they sit at that intersection.
Right at the intersection of high barrier to entry systems, like mainframes, and new compulsory tech.
Okay, let's do a quick SWOT analysis based on the report. Strength, weaknesses, opportunities, threats. Give me the headline for you.
Like strengths, sticky clients. Once a bank installs your system deep in their mainframe, they almost never switch. It's just too risky. Also, they are cash-rich and debt-free, which is a superpower in a high-inflation economy.
Weaknesses.
Weaknesses, client concentration. They rely heavily on specific big partners. If IBM changes its strategy, VBT has to scramble. Also, for income investors, a big one. No dividend proposed for this period.
We'll definitely come back to that missing dividend. How about opportunities?
Opportunities. The new digital SME platform for banks is a big one. But the real gold mine is that aggressive expansion into the U.S. and the DACH region. If they can sell high-quality Turkish engineering at euro or dollar rates while most of their costs are in lira, well, that's a massive margin booster.
And the threats.
Threats, inflation, and brain drain. Tech salaries are just skyrocketing. If EBT wants to keep top talent, they have to pay top lira. And personnel costs are a huge line item.
All right, now we can move on to the part everyone is waiting for, the analysis. The numbers.
Before we look at a single number, we have to address the elephant in the room, or maybe the rubber ruler in the room.
The rubber ruler.
Yes. This report uses TMS 29, which is inflation accounting.
Explain that like I'm 5.
Okay. Imagine you're building a table. You measure it in January, and it's 1 meter long. You come back in December to measure it again, but your ruler has shrunk because of the heat.
Okay.
The table now measures 1.5 meters on your shrunk ruler, but the table hasn't actually grown.
Right, the ruler just changed.
Exactly. That's inflation. If you just looked at the raw numbers, you'd think the company grew massively just because prices went up. TMS 29 adjusts everything for purchasing power, so we can see the real growth.
So when we see these numbers, they're real terms. We aren't being fooled by the shrinking ruler.
Exactly. All the figures we discuss are inflation adjusted. A crucial point.
Okay, let's start at the top line then. Revenue. For 2025, VBT posted 2.427 billion TL in sales.
Now, catch this. The report actually notes this is a decrease compared to the previous period in real terms.
A decrease. That sounds bad. Revenue down. Should investors panic?
Not necessarily. This is where you have to be a detective. You look at the quality of the revenue. Which brings us to gross profit. It came in at 755.3 million TL.
Yeah.
Here's the key insight. Despite the revenue dip, the gross profit margin increased.
Wait, so they sold less stuff, but they kept more money from every single thing they sold?
Precisely. Management's commentary points to effective cost management. But reading between the lines, it suggests a strategic pivot. They likely focused on higher-margin software and service business, where they own the IP, rather than low-margin hardware pass-throughs.
So they stopped chasing empty calories revenue and went for the nutritious stuff.
That's a perfect way to put it. They aren't just chasing volume, they're chasing value.
That's a crucial distinction. Let's move down the income statement. Operating profit, or isas valiet kari.
It's sitting at 318.6 million TL. This is the number that proves the core business writing code, managing systems, is healthy. It's not just financial maneuvering. The engine is working.
And the bottom line, net profit.
175 million TL. When you divide that by the 170 million shares, you can see they're profitable. But remember, this is after heavy tax and inflation adjustments. The raw cash generation is actually stronger than this net profit number might suggest.
Speaking of cash generation, let's talk about my favorite part of any balance sheet, the cash.
Cash is king, especially in Turkey. VBT ended the period with 275.4 million TL in cash and cash equivalents.
Which is up from about 242 million at the start of the year.
Right. It's more than a cushion, it's a war chest. And when you look at the free cash flow, it's positive. This means the company funds its own growth. They aren't going to the bank hand in hand asking for loans to keep the lights on.
Which brings us to debt status. In this economic climate, debt can be an absolute killer.
And this is perhaps their strongest financial ratio. The company is in a net cash position. Their financial debt is negligible compared to their assets.
Why does that matter so much right now?
Think about the environment. Interest rates are sky high. Companies with heavy debt are bleeding cash, just paying interest to banks. VBT is immune to that. In fact, their cash earns interest. While their competitors are struggling, VBT can invest in R&D. It's a massive competitive advantage.
So they have the cash, they aren't paying it to banks, so what are they doing with it? Let's talk operational performance and investments.
They're doubling down on R&D. The report mentions specific projects, like carbon footprint software, which is very trendy for sustainability compliance in Europe, and AI and machine learning algorithms.
And they landed some big wins in 2025. I saw the SGK, the Social Security Institution contract.
That's a massive renewal. It was signed in December 2025, and it's worth 207.4 million TL for the year 2026. That is guaranteed, locked-in revenue from the government. It provides a baseline of stability.
They also signed an agreement with a leading bank for that digital SME platform you mentioned.
That's the scalability play. You build the platform once, the bank rolls it out to thousands of small and medium businesses. It's a high-leverage product.
And the IBM partnership, they had that event in Northern Cyprus.
And that's not just a party. Keeping that relationship warm is vital. Remember, VBT's mainframe business relies on IBM. If that relationship sours, a huge chunk of their business is at risk.
Let's look at what management is saying about the future. What's the outlook?
The focus is shifting to value-added services and export potential. They really want those foreign offices, UK, US, Europe, to start generating real revenue. They want to be less dependent on the Turkish lira and the Turkish economy.
But I have to play devil's advocate here. We have a profitable company, tons of cash, no debt, and yet, for the dividend lovers out there.
Bad news, I'm afraid. The board proposes not to distribute profit for this period.
Why? They clearly have the cash. Why not give a little back to the shareholders?
It's classic growth stock behavior. They're retaining all their earnings to fund that global expansion. Opening offices in London and New York isn't cheap.
So they're telling investors to trust them.
They're telling investors, trust us. We can generate a better return by reinvesting this money into the company than if we just gave it to you as cash.
So if I'm an investor, I have to believe their growth story is better than having the cash in my pocket today.
Exactly. If you want income, buy a utility company. If you buy VBT, you are betting that they can pull off this huge international expansion.
Let's quickly touch on shareholders' equity before we wrap up the numbers.
It saw a strong increase, mostly due to those inflation adjustments we talked about. Equity represents a very healthy portion of their total assets, which are around 1.3 billion TL. The balance sheet is rock solid,
Okay.
and they have plenty of room in their registered capital ceiling, which sits at 3.84 billion TL, so they have flexibility if they ever did need to raise more money. Though with their cash pile, they really don't need to.
I always like to dig into the footnotes. Anything lurking in the fine print we should be aware of?
Well, there's an interesting web of related party transactions. You see significant receivables and payables with VBT MEA, their Dubai subsidiary.
Is that a red flag? Sounds a bit complex.
Not necessarily a red flag, but is a pattern to watch. It relates to software licensing deals, specifically for BMC software distribution. It just shows how they're moving inventory and licenses through their international network, probably to optimize costs or distribution. It shows the global machine is working.
Okay, let's bring this all together. We've looked at the history, the global map, the inflation-adjusted money, and the strategy. What's the final verdict here?
If we synthesize all this,
Yeah.
VBT Yazılım is what I'd call a local giant attempting to go global.
2025 looked like a year of consolidation. Revenue dipped slightly in real terms, but they got much more efficient. Margins went up.
And the balance sheet is, frankly, bulletproof. Cash-rich, debt-poor. That gives them staying power. They can weather a storm that would sink a leveraged company.
So what does this all mean for you, the retail investor?
If you are looking for immediate income for dividends, this report says, look elsewhere. They are hoarding cash to fuel the engine. But if you are looking for growth, the story hinges entirely on those new subsidiaries. Can they successfully sell Turkish engineering expertise in London, New York, and Zurich?
It's a bet on their ability to export their success.
Precisely. If they succeed, the stock is likely undervalued because they'll be earning hard currency. If they fail, they remain a strong but locally capped player in the Turkish market.
So here's a thought to leave you with. With zero debt, a pile of cash in the bank, and offices now open in the world's financial capitals, is VBT preparing for a major acquisition to buy their way into these markets? Or are they gearing up to become the first Turkish software integrator to truly crack the Western market organically?
That is the multi-million lira question. And watching them try to answer it over the next 12 months is going to be fascinating.
If you enjoyed this deep dive into VBT Yazılım, please hit the like button and subscribe. It really helps more people find these insights.
And if you want to support us in making more of these videos, consider evaluating our channel membership.
You can also show your support with super thanks. It goes a long way. Thanks for listening.
Goodbye.